The results are in, and Microsoft was blowing out expectations up after hours. Meanwhile, Google didn't quite meet the stock traders' expectations and was down. So with mixed results, do we need to look to the GDP? Will the Fed have to raise rates more than even expected at this stage? Bitcoin surged 18% in the last 24 hours, leading many to believe where is the top? Today, we'll discuss that along with US 500 levels, what's going on with Treasuries right now, and of course, the big earnings levels for this week. Microsoft, what's going to happen after such a result? Well, welcome back, everybody, to the Daily Show where we talk about stocks, commodities, and cryptos together. If you like any of those markets, remember to subscribe and, of course, smash that alert button. Let's discuss, though, some of the macro and key lead data because we have some big dark pool transactions and other things going on that might surprise you. Energy was down the last 24 hours, which is probably the most notable, but fear and greed index did actually go back up. So we were sitting at a 27, now we're at a 32 reading. Some recovery across the futures market, which we'll be looking at. Some good little structure down below. We did also see bullish percent index come back down underneath 30, which often marks a key pivotal zone. We've already talked about recovery in the bullish percent index once. Now it's to a new low, but it's underneath 30, often considered the buy zone for markets when we see readings such as this. Above 70, yeah, okay, we're going to keep riding that trend until it ends, but usually this is a good level for us to start looking at market conditions. We also talked about on our Twitter/X account that we basically were looking for yield inversion. And during times where we start to get yield uninversion, which is what is about to occur potentially, we tend to see a rally in markets. Now, a few of you notably pointed out on X that this didn't usually happen until we usually saw the rate cuts from the Fed. So in previous situations, the Fed was rate cutting, and this time they haven't been doing so. I would argue generally when we uninvert, we will see some type of pivot from the Fed. So of course, we'll be watching that. But this happened many, many times before. 2018, we obviously saw it in 2007, and of course 2001. And after each time we saw uninversion, we actually had a rally from the markets. So remember, it's perfectly normal to uninvert, see a rally, and then potentially you need to be on the lookout for something a bit dodgy to come. And of course, 2024 could be the year of chopping up and down even more than it has been in 2023 so far. One-day moves in stocks, as we know, if you miss on both EPS and sales, get ready for some nasty moves. That's pretty much continued through. If you beat, maybe look for a little bit of strength. But it seems to be that even if you beat at the moment, most of the markets are a little bit subdued. Here is the macro index model taken off Sentiment Trader, and you can see here that it's in the middle of nowhere land. So basically, people are confused right now. Are we at an extreme high or an extreme low? The answer is no. And throughout history, we tend to really be looking for those extreme lows or extreme highs for good reads on something like this. I thought I'd bring it up. It's always interesting to look at new charts. Forward PE ratio was trading around 17.5, which for many people may be a position in. Of course, forward PE is dictated to by everybody reading right collectively in terms of economists and believing that the market is going to hit the key levels. But of course, this is something we will be looking at and paying attention to. What about Bitcoin after price halvings? Well, here's a chart that shows us that it's right on time for a great announcement. In previous years, this is exactly where we saw that rally up, and it's got a lot of people excited about further moves, and rightfully so. Let's take a look at some of the history of Bitcoin moving through times. And you can see here that it usually is kind of like a 1 year down, then we get basically 3 years of pretty positive returns. 1 year down, 2018, 3 years of positive returns. 1 year down, 2022, and 2023 so far, giving us a positive return. It does seem like if it's going to be the strong year, it's usually the year after. So will 2024 be the year of Bitcoin once again? Well, it looks like that could be one that we need to be paying attention to. And it could be just the beginning for investors and traders out there. Of course, we will need to be watching. For earnings for the rest of the week, we've got some big ones coming forward. Of course, Meta will be now on the horizon. And we've also seen IBM coming out in the next 24 hours. Then we've got Amazon, Enphase. Now, this one will be interesting. If you had to guess, you would say that maybe it's been oversold, but what an important earnings for Enphase. That stock has been beaten around, and you will be wanting to watch it just to see the implied vol that's going to come through from there. I also think that we need to be watching Meta pretty closely because it's got a plus minus 8 on it. And you'll notice on this chart, we don't actually have an end phase. And that's because the end phase is off the chart in terms of the percentage move. It's expected to be a seriously volatile event. So yeah, could be an interesting one on those charts. Let's talk about what direction everybody's thinking. As we mentioned, most people are confused, but we will be looking for this on Thursday this week. So once we get our new sentiment reports coming out, I have a guess most people are probably turning towards the bear side, but we'll find out. I mean, if they're all turning bullish, that could mean that this is a short-lived rally. And again, there are some signs that we're looking at on charts that may say that it could be short-lived. It's not in these statistics though. Here are the statistics for the week. We notice that there is a slight positive correlation when we're talking about 1998 to 2022. Before that though, it was a super negative week. Traditionally, we also know that in pre-election years, we do tend to see a turn in markets around this date, 25th being the notable turn point. Funnily enough, about the 23rd, 24th, we obviously hit that low. So the 24th, we hit a low, 23rd, and then we usually see that turn. This is the normal thing that happens in pre-election years. Let's look at the data stats based on this year so far. If we have a look at the strength of January into August, then we look at September, October, and August being weak months, then traditionally we have a 15-3 bullish ratio by the end of the year. So that's a pretty good stat for the bulls out there. Pre-election year Novembers often do remain pretty decent. We've also talked about gold at great length. That has continued to hold up, although there are some signs that maybe there's some weakness around this zone. We do expect pretty good rallies. I've talked about this a few times, and this has got to do with a short squeeze that's occurring at this point. And it could lead into a much bigger multi-month move for gold, possibly in kind of idea of maybe 20 to 26, 28% kind of moves. That's what we've seen in the past. What about Qs? Well, Qs have had a couple of good trades on them. Here are some of the big trades that have happened over the last couple of sessions. We saw some nice big bubble trades coming through, and that means that we could be finding a temporary low. Remember, we did previously see this level have some purchases. We know they were purchases because it led to a bullish move. So at this stage, the market is defending the key zones, 4,200 to 4,250, most notably on the S&P 500 is currently being defended. Meanwhile, on oil, some strange trades going on here. We obviously expected sells to come in oil. So far, so good. I don't know what this is though. A big trade coming through in the last 24 hours. Is it a further sell or is this some kind of buy? Oil is kind of confusing almost at this zone. We'll talk about that later. Also gold. Yes, gold stocks anyway. Here's Barrick. Big trade coming up. I've got to say that's a sell or at least some profit targeting. The reason why you'd say something like that is because it's happening at a previous level of supply or resistance, and therefore you've also seen some trades there before. Now, I actually am bullish on stocks like this. Of course, we're talking about gold as being a fairly positive kind of thing moving forward. But at the same time, this is a critical zone for it, so we will be watching closely. Let's move over to options. Options were trading, I would say, not necessarily huge volumes, 34.7 compared to 39. Notably, a lot of calls and puts compared to puts, but 56% calls. People getting probably a little bit excited about the earnings season. So that could tell us a little bit about sentiment actually being more bullish than I guessed. Always IWM though, the Russell, 983,000 puts versus 300K calls. It's just wild how many puts have been put on the Russell. It's got to be finding some form of base, surely. I mean, this thing is stacked with puts at this stage. We've also seen some unusual activity coming through a couple of the hyper-growth stocks, and of course, anything to do with earnings, and you're going to see generally bigger trades. So you can see here actually a little bit more calls than puts, and rightfully so. However, the old Alphabet, more calls here, not going so well in the last 24 hours. Unless that thing recovers, it's down like 6 after hours. Let's move over to what was doing well. Now, one of the things you don't like about this rally has to be that utilities smashed it. 2.57% on the day. Not exactly what you want to see when you're talking about a rally. We also have metals doing very well. And then, of course, solar. Some of the risk kind of on things, I guess, were coming through, but it was a mix match. Yes, semiconductors did well, which is good. So did communications. But it just shows you the market is kind of like, well, are these earnings really going to hold up? Google did pretty well, really, but again, the market didn't really like it enough. They're a bit harsher on the markets this time around. We're meeting expectations, but that's not necessarily leading into super, 10% moves or anything like that. It's more like cautionary tales of the future. The new future is like, well, we're seeing some challenges, we're seeing this, and that's kind of what the Fed wants to see. But again, it is hurting the market. There are no positive sectors in terms of the mains over the last 5 days of trade. We ended up seeing staples actually go to a negative 0.1 over that period. And you can see here that, again, utilities, staples, and healthcare are in the top kind of 6 or 7. And that usually tells you that you're in a bit of a defensive mode for markets. We want to see semiconductors and we want to see technology and those types of things start to recover. What about percentage of stocks above the 20-day moving average? That improved 24%. We also saw an improvement above the 50, but not much yet on those, but no new lows, which is good. And of course, the percentage of stocks above the 200 continues to be really weak. I don't often trendline this, but you can kind of see here that we've got this possibility of percentage of stocks above the 200. If we break through these trend lines in the future and we go back above 40, that's going to be a super good level. And I would say that's going to come along with some trend lines we'll look at later for things like the stock market, for things like AAPL and other stocks. What about yield inversion? Still no cross. And I wouldn't expect it to come just yet. But of course, set your alerts at 1%. It's going to be an important level. It should mark, along with unemployment zones, a very key zone for us to be able to call the recession more correctly or accurately. Treasuries had another good session on them. Have they put in the low? Some people are arguing yes, they have. It's good looking structure. I've argued for a while. The biggest thing here with Treasuries to me is just the sheer volume. You look at these volumes, look at this, just mass volumes through here. Somebody definitely likes them. Most people seem to hate them. It's become a meme, and that usually gets me a little excited. So we're looking for the base. We don't have it yet. Of course, patience, react, don't predict is usually the key here, unless you're a position-based trader. So it's something we'll be watching. Copper, little recovery after taking the low here, looking for it to break the trend line. Again, very similar to others. What about the equal weighted market? It was pretty weak. It needs to hold this zone. So if we think about it, this level here is basically a demand area for RSP. It needs to hold, and it needs to hold big time. Until we get back above this 143, it's unlikely we've put in the V, so it's unlikely we've really out of the troubles yet, but people will be watching this one. And speaking of troubles, we do have still some problems. Number one, we're not really seeing a re-injection super heavy by the Fed just yet, so we'll be watching the liquidity charts as much as we can. But the issues really come down to the Dow Jones Transportation Average Index and home builders. This has not shown us recovery during the recovering market. It does tell us that there is an underlying weakness in this market that we need to be very concerned about. And of course, I'd love to see this turn towards the bull side. Some notable zones to set alerts for, 14,000 in the future. If we get down to there, we're hitting a 4150, 4120 on the S&P 500. That's going to be a very critical zone for us to look towards the bull side. At this stage, though, we're looking short-term timeframe stuff as well on the S&P, and we'll talk about that very, very soon. Home builders also couldn't hold up during the session, 0.2 down. We're looking for home builders to find recovery. The difference between March and now is March had great home builder, just sitting there, nice little channel, no real weakness. Over here, things look way worse. And it makes me kind of think that maybe the rally will be false. But again, we're going to look at it with the positions and with the information that we have at times. Dollar index, pretty strong kind of recovery here on it. It obviously weakened by taking that new low over here. I expected it to recover. We're back to the 20 moving average, which remember was a critical one because we saw here a buy, kind of a buy, and then it moved underneath. So if it's going to sell, the dollar's kind of at that point where you want to see weakness come back in for the dollar. And this would be the zone that you would be targeting. I had a fair feeling the euro would weaken off in the previous session, and it did. But in this case, it was just kind of like a replicatable trade. We did that in our private community. We talked about it. But really, the dollar is back at that key critical supply. And we know it's a supply because it's sold off. So watch the reaction here for the dollar. Will be a big one. And of course, we've been a bit neutral, maybe even negative on it at this zone. It was a strong recovery, but I'm going to look to see next. Now, because the dollar was doing its little thing, gold chose to be random. We did speak about in the previous video talking about this level being short, and it did manage to short off. Now, I thought it might actually get to a 1950 kind of one. Didn't quite get there. It actually rallied off 1953. Now, for anyone that was shorting up in here, you should either have a break even at this zone or some kind of profit. And you've got to remember, from a risk reward perspective, it's already been a pretty good trade to the short side. Now, do we want to see something like a 1920, 1930? Ideally, yes, because that would kind of give us a bit more of a pullback that then allows us to get back into a range. We do know this is a critical zone for gold because, of course, it's stopped it in the past once, twice, 3 times, 4 times. So this would be the 5th. All in all, it's looking pretty strong from the higher time frames, such as the daily. Of course, going against a freight train like this that's a short squeeze is very difficult, but we remain positive on gold moving forward for the next couple of months. Let's move over to GDX. Pretty good. Again, Barrick had some take profit potentially, or maybe it was the entry. We're looking for new alerts. Set the alert above the high. If that happens, could be a great time for gold again. US oil, this fell down pretty hard. We've been negative on it the last kind of like 4 or 5 sessions. And yeah, it's remained negative. So did we get a massive pullback that allows us to get into new shorts? No. But people that were already in shorts at this level, it's a massive smiley face from you guys. Good level. Probably an excellent TP1 zone or TP2 zone, TP1 being in here most likely. So this is a very good D-scale position in terms of the way we'd usually look at it from a technical perspective. Obviously, you've got to make your own decisions and do your own thing, but it's a key critical kind of like demand. You can see before a lot of action around here. So we'll be watching how it reacts to this zone. And at this stage, sellers would be around that 85, 88, and of course supply at 89.50-ish, I would say. Let's move over to Apple. Now, I mentioned trend lines before. Let's just take a look at the 2-hour chart here to get a bit of a perspective. So the trend line is across the Qs. It's across Apple. It's across the across the S&P. Heaps of things. Here's the trend line down. You can see that we've got what we call like, a pretty significant level for Apple. I've got an alert above because I think that's already a great sign the markets are going bullish. Then, of course, we've got an alert above this area because if we break this trend line down, it's so significant across so much or so many points in the markets. And we'll look at that soon. But AAPL, good little kind of strong recovery. We discussed this session, this little area in the previous kind of market. We expected to sell off. It did. It only put on 0.25, but actually the trade during the session was a little bit better. So not too bad at all there. Google was another one that actually put in some good work during the session, but of course it's down 6% after hours, which takes us to 131. Now, I think what's notable about Google is we've just got to say someone knew this. And why do I know? Because we saw a monster trade at this exact level. So we've basically sold back down. So big trade. We reported on that last week, and Google's back now into a pretty strong demand zone. So if it does keep selling off, you could see like that 128 to 130 level being maybe a zone where there's some strength here for a stock like Google. Microsoft did better. It was up about 4% after hours, which will trigger in potentially a new high. That's a strong sign again from the market. I expect it to open right around this level here. So if you mark out kind of like a 4% and you think about where it is, 4% is here, but I kind of expect it to open like here, maybe 3.35. And the reason is because this is the key resistance. How it reacts to this, something we'll be looking at over the next 24 hours. Big key zone for Microsoft. Now let's move to the major indices. Russell 2000 first. Nothing on the Russell that is super impressive or negative. We haven't hit our alerts. We still lackluster. The Russell will probably come after the NASDAQ and the S&P start to recover. If they do, Aussie market kind of similar, finding still buyers at this pressure point, but we're not even sure if they're super buyers yet. German market's the same. Now, if you looked at the German market, you would say long leg doji, bullish, so therefore we're starting to move up. Okay, the German market's putting in some good signs, nice little potential change of trend. Obviously, certain trend lines like this one that was going down here, a series of lower highs and lower lows, that was breached above. These are positive signals from the short time frames. The CQQQ, well, it went up, but I don't think there's much replication there, so we'll talk about that soon. Here's the trend line on the Qs we mentioned before. If we breach this zone, good level to have on your charts, it's going to be a huge deal. At this stage, we're finding some buying pressure. So let's have a look at the NASDAQ futures. And they didn't go down as much. The best trade was really the S&P the last 24 hours. The S&P gave us some excellent trades. We're still kind of struggling around this supply. But I think the S&P will give us the key zone. So of course, next zones, we know where they are, but I'd be correlating them more with the S&P level. So let's have a look at the first one. The first one is that the market, of course, sold off and then rebounded to hold above 4220. Now that's fairly key. To hold the 4200 is important. And you can see the market keeps seeing sells and sells and sells and sells right around this price here of 42 kind of 55. Now, why is that? Let's look at the futures market. You can see that the 42.60, 42.55, there are clear signs that there were sellers here. So this is supply that's pushing through. And this trade here was an excellent one. It happened through so many stocks over the last 24 hours. Market came down, really great strength wick through here. If this market closes below that zone, I'd say we keep faltering and move down to that 41.50, 41.20 zone. If you're a bull in markets, you need the 42.80 taken. I want to see that thing taken, and that will show us that we might have further recovery. But like any of these markets right now, it comes down to swing traders versus day traders. A day trader is going to say, yep, I'm only looking for that type of thing, all good. And a swing trader is going to say, I need to see these series of lower highs and lower lows getting taken out. We breach through this 4,400 zone. We're going to fill a gap and we're going to do something pretty special. Of course, many people will then say it's a double bottom, self-fulfilling prophecy. Now, one of my things that I always like about patterns is going to be, if a pattern did happen, does it prove to a key level? So if you think about this, it proves right into the high. So I really like the idea that this could be a double bottom. You're starting to call it a little bit soon. Obviously, small time frames are key. Long leg doji was not closed above, so it's not like we got that confirmation. But yeah, look, we're in earnings season. This is what's going to happen. We could easily sell off to the 41.50, 41.20. So position trading with average forward PEs and other things, that's going to be different to others, but certainly something we're watching. VIX got crushed. A few other things occurred. And of course, with Bitcoin going as strong as it has been, many people are saying, well, this is the beginning of a new run. Let's talk Bitcoin though quickly here. Here is Bitcoin. It got up to 35,000, which is obviously a 5K hit. So that's always going to be key. I mentioned in the last video, I think Ethereum, this level up here was key. And yeah, I mean, it hit it. It's a great take profit zone. It synced with many, many cryptos across the board. This is exactly where I would expect usually some selling to happen. I'm not sure if it can sustain here. Obviously, if you're a longer term holder, that's going to be different. You're probably going to have a bullish view of next year. But at this stage, this is a critical resistance for things like Ethereum to get through. They get through this zone, while we could be looking at a very large move back up to 2,100. Bitcoin usually drives first. It usually does double, if not triple, the percentage of a lot of other major coins, and then the rest drive through if it can be sustained. So it's a big deal, the ETF. I've mentioned it several times live streaming here on the videos, but at the same time, it's a big deal longer term. It's not necessarily just this mass sugar rush. Oh, look how good this is. You saw many people getting onto the exchange and selling positions into it. So they're selling into strength. I'm not really convinced either way. I definitely think Ethereum hit that critical zone. So no changes in trend on the bigger timeframes and nothing yet to report back that's considered on really any time frame except for bullish at this stage. So we'll continue to maintain that and look closely whenever we can. In terms of news coming forward, do remember Wednesday is not only big earnings season, but also we have Fed Chair Powell annoying us. So remember that's coming out. And then on top of that, we've got some other big data coming through. So of course, we'll get our full GDP number, which could claim 5%. We'll see how that goes. And core PCE price index with revised UOM consumer sentiment. So a lot going on. If you want to cover all of these things and more, remember to subscribe to the channel, smash that alert button. We'll see you in the next video. And do remember as well, daylight savings time shift for all of the Europeans out there, which happens this weekend. That changes a lot of things for everyone around the world to figure out when London Open happens and those types of things. So check it out, daylight savings. It's almost all over. The double or triple that happens around the world is almost done. Thank you very much. Bye for now.